Welcome to the Skilled MBA Social Enterprises Case Study Series. In the midst of the COVID-19 crisis, Estímulo emerged as a lifeline for Brazil's small businesses. Born out of urgency and empathy, this organization set out to address critical financial gaps, offering accessible support when it was needed most. Estímulo's mission was clear: to foster resilience, protect livelihoods, and enable small businesses to survive and grow in a severely disrupted economic environment. But its impact didn't stop there. The groundwork laid during this period paved the way for Estímulo's innovative blended finance model, combining private and philanthropic capital to sustainably support entrepreneurship. A deeper dive into this model is coming next. Estímulo's innovative financial model leverages blended finance to empower small businesses in Brazil. By combining public and private funding, it provides accessible credit and financial education to entrepreneurs. This model addresses the gap left by traditional banks, fostering resilience and growth in Brazil's entrepreneurial ecosystem. In 2020, amidst the economic turmoil caused by COVID-19, Estímulo was born. Traditional banks withdrew from small business lending, leaving a void. Estímulo stepped in, offering accessible credit and financial education to empower underserved entrepreneurs, ensuring their survival and resilience during the crisis. Estímulo achieved an 85% repayment rate, defying expectations in a tough economy. Over 5,000 businesses across Brazil's entrepreneurial sectors were served, maintaining twice the employment levels compared to peers. By 2021, it became clear that small businesses were not inherently high risk, but were underserved by traditional financial institutions. Blended finance leverages philanthropic capital to absorb initial defaults, reducing risk for private investors. This approach attracts market rate returns, drawing commercial capital to scale impact. Estímulo's innovative model in Brazil's small business lending sector exemplifies how combining patient capital with commercial discipline can create sustainable, impactful solutions. Estímulo's approach diverged from traditional microfinance by targeting the missing middle, small businesses needing 500,000 to 5,000 for growth. Their holistic model combined financial capital with educational resources, mentorship, and business development services. Financial education workshops were pivotal, reducing default risk and enhancing entrepreneurial capacity. In 2022, Estímulo faced rising default rates, climbing from 15% to 25%, as Brazil's economic recovery stalled and inflation eroded business margins. The central bank's Sistema Especial de Liquidação e de Custódia rate hike to 13.75% increased Estímulo's capital costs, compressing margins. Additionally, global uncertainty shifted investor sentiment towards safer assets, threatening Estímulo's funding pipeline. Vinicius Poit, as Estímulo's CEO, faced critical decisions. Should Estímulo adjust its blended finance ratios to draw more commercial capital? Should it expand nationally or focus on proven markets? Balancing its social mission with financial sustainability was crucial. These strategic choices would shape Estímulo's future in Brazil's evolving economic landscape. Small businesses in Brazil, comprising 30% of formal enterprises, face a credit gap, receiving just 12% of commercial credit. These enterprises, employing 5 to 49 people and generating Rs 30 million annually, present a significant opportunity for Estímulo to enhance financial access and support economic growth. Recalibrating risk sharing involves adjusting the philanthropic first loss capital and private investment ratio from 30.70 to 40/60, appealing to risk-averse investors. Client segmentation can offer tiered products with varying interest rates and support. Strategic partnerships with local banks or the Brazilian Development Bank can provide lower-cost capital and leverage existing networks for broader reach. Estímulo's geographic expansion strategy initially concentrated on São Paulo and select urban centers due to lower monitoring costs and easier market access. The Northeast and Central West regions offer untapped potential with high small business density, but limited financial infrastructure. A digital-first approach, complemented by strong local partnerships, can facilitate cost-effective expansion and enhance credibility. Estímulo's model exemplifies financial innovation's role in inclusive growth, potentially reshaping Brazilian finance. It could influence policy reforms and mainstream banking, altering capital flow to underserved segments. Success may drive a shift in financial practices, while failure might reinforce traditional banking's cautious stance towards small businesses. Evaluating Estímulo's impact extends beyond financial metrics. Key indicators include job creation and retention, income growth for business owners, and business survival rates compared to control groups. Additionally, assessing community economic resilience provides a comprehensive view of Estímulo's true influence on local economies. Blended finance is crucial for bridging Brazil's micro, small, and medium enterprises funding gap. Macroeconomic shifts can impact even robust models. Small businesses need tailored assessment, not labels of high risk. Financial inclusion demands both capital and capacity building. Brazil's inclusive finance future will likely blend commercial and impact capital, offering lessons for investors and policymakers in emerging markets. Thank you for joining us at Skilled MBA. Skilled MBA offers insights into impact strategy, financial innovation, and entrepreneurship in emerging markets. For detailed exploration, contact via mobile at +91 8753 000795, email at support@skilledmba.com, or visit their website at skilledmba.com. These resources are invaluable for those seeking to understand and engage with the evolving landscape of inclusive finance.